Hi, Ron. It's Thursday. It's the 18th of September. It's Bank of England Day following Fed Day yesterday. Whatever. Interesting press conference. I left you and went off to listen to what Jay Powell had to say yesterday. He was actually ended up being quite coy, I thought, about the future rate path. Obviously the initial reaction was, rates were cut finally, 25 basis point, more to come, 2 3 possibly by the end of the year, 2 or 3 more 25 basis points cuts. And let me just bring in the I've got sterling here. I'll go back to last night first. And we got this sort of initial weakness. There we go. Some almighty candles yesterday. Sorry, I don't want to do that. Got my blotter thing on. I want to get rid of that. Just ignore those blops. We're doing that on the 5 minute time. Just huge. We can't see that there. We may as well use it while I'm doing it. Hide that. So massive reaction. Initially, huge weakness in the dollar. We went to 137 here, 25 for cable. Same with euro. Same against all the major crosses. And then as the press conference progressed, we rescinded. So here, within sort of an hour of the announcement, we were back under the 50-hour moving average. This big yellow line here. This is sterling, by the way. Hang on a minute. Let me just. I would start with my head huge and realize you don't want to be staring at my head at all. So you can see here a big move back down for for sterling. So dollar came back quite strongly into close, and then this morning here, 5 o'clock, 6 o'clock. Here, the my 8 o'clock candle here, the European Open here, sterling bounced quite aggressively. Obviously, there's lots going on in the UK today. The trade deals between the UK and the US likely to be announced, and $10 billion pounds worth. I'm not sure whether it's dollars or pounds worth, but there's obviously quite a significant difference between the two. But certainly lots of deals between the US and the UK as Trump meets Keir Starmer. Big formal pomp and ceremony yesterday in front of the King. Yesterday, Trump misbehaving himself again, walking in front of him, and anyway, not following UK protocol, but that's Donald Trump for you, isn't it? So sterling's up here basically. So big surprise on the sort of veracity of the Fed and the rest of the Powell in particular, and the rest of the Fed to actually continue with this very aggressive, or could be expected very aggressive rate cut. The other big thing which we talked about last night as well was this idea that there was going to be some more dissenters, either to not cutting, which didn't happen, or joining, as expected, Stephen Mirren, the new Trump man, on the board to cut rates by 50 basis point. There wasn't. So Waller and Bowman didn't follow him. So there was an amelioration in the outlook, admission that the job, if we'd known more, they might have moved earlier as far as the jobs situation is concerned. But again, today, in an hour or so's time, we've got, after the Bank of England, we've got the weekly claims and the Philly Fed as far as the US is concerned. So let's see. That's all going to come out. So not in an hour, so in about half an hour or so. So see how all that comes out. Literally, say in 5 minutes' time, we have the Bank of England. And remember last time, if we're just going back to sterling, we'll come back to the day, the news earlier on the day so far, but we're coming back to sterling. Remember, there's this significant split within the Bank of England, with the MPC, the Monetary Policy Committee, about rates forward. We are expected to not have a move today. Everything that's been sort of telegraphed out of the Bank of England is suggesting we're going to hold rates here at 4%. So the UK with the US, the top of the tree when it comes to interest rates for the big industrialized countries, the G7 countries. Obviously, Canada went again yesterday down to 2.5%. So the Bank of Canada went yesterday as well. So it's a busy week. Key decision here for the Bank of England, and the outlook from Andrew Bailey is in his interviews later on to the press. So I don't think there's a press conference today, but we'll obviously I'll take it if indeed it is actually coming ahead. Just before the Bank of England, a few minutes. This is what the markets are now looking like for October. We were chopping around quite a lot yesterday after the data, but here for the next meeting of the Fed on the 29th, here from the Fed Watch tool from the CME Group, 90% chance of another 25 basis points. So that's still the expectation. There was a few percentage chance of 50 basis points in October. That's disappeared for now, and a 10% chance, still not insignificant, but a 10% chance of rates not moving at all come October. Given, I think that's very much to do with the fact that Waller and Bowman stayed pat, and the independence of the Fed is quite key to the markets. The interference from the administration, clearly markets don't like that, and how much sway one person has, Stephen Mirren, even though he's a voting member, non-voting member, and it's only temporary, and he's clearly not going to be the next Fed chair, and neither is Waller, given the fact that he didn't. One would assume that he didn't go with the with Mirren to cut rates. So it's not like it's either between Varsh and Kevin Hassett as that looks like they're the front runners for the new Fed chair come May. But Mr. Powell is not going anywhere quickly. So let's just bring sterling back in on the 5-minute chart. That's the hourly chart, guys. The 5-minute chart, we were trading this earlier. Got a dot working at the moment on my but so we'll see where we go. I was just demonstrating this strategy to somebody before we came live, but we were long here this morning as through the 50. And remember, we used the cross of the MACD and the parabolic SAR to get in and get out. So this strategy here, literally, if we'd automated this, would have been long here, out there, and it's currently not in any position because we've crossed short, so it's gone short there. So this strategy is short there from 11.05 here on this 5-minute strategy, and it's obviously got in there and it's out of the money. Stop loss will be up here above the parabolic SAR. Now it's flipped back the other way, but the MACD hasn't crossed yet, so we're not changing it. Obviously the data's dropping. Sterling here, the news has just come out, probably no change. I'm pretty sure that's going to be a no change from the Bank of England. Let me just check my other feeds here. See, it's Barclays bank rate unchanged at 4% in September monetary policy. That's the news. Nothing. The statement. Let me see if I can find the statement. BOE. Statement that'll come in shortly. Sterling is ticking up on that. That's the immediate reaction there. Sterling up 135.65. So this short would have closed out here on that news. Again, I probably wouldn't have had that so close an hour before the data. That's looking pretty positive. It's looking like it'll cross here on the 5 minutes. So I'm happy to buy that on the conclusion of this this candle here at 136.55. Say we'd let's do it. Let's do it on the 2-minute time frame, which is what we're allowed to do with your standard account. So there's the 12 o'clock candle. So we're going to have to wait. Here you can see we had a cross. It's dipped and crossed. So a possible long position. But it chops around a lot. What's the other strategy showing us? I've only got 2 strategies on here now. The system has cut me out. There we go. This would have crossed. That's the daily. Let's come back to my preferred short term is the 5 minutes. So where would I be here? That's a potential buy here. It's gone back against me, spiked higher. My stop loss would be below. There's my entry candle here, so the stop loss would have been at the bottom of this one, because it's already actually probably through there, going back there to that area there. So if it been at the candle, we'd have been stopped out on the data. Obviously, risks of trading the news data here. Interestingly, here with the the Bollinger Bands here on this 5-minute strategy. It's very much side. It's a bit short term, to be honest, for this particular strategy. This is a mean reverting strategy, and anything under 10 minutes, it's not great. But you can see we're sort of we're consolidating, but sort of move. And again, another initial move high to 136.60, and now we're moving lower. Let's go back to the one we were using, the MACD and the parabolic SAR on the 5 minutes. So again, big spread. So that was that. It's lost my dots. So what's this? So this would have been triggering a potential short there. The parabolic SAR doesn't flip till then, so we'd have got short here on that one. Stop loss would have been up here, and if the system had taken that, because if it's automated, it ignores the new. It would have been stopped out on the news. Now then, this is flipped. Parabolic SAR is flipped again. It does that a lot. That's one of its problems with it. It can flip around a lot when we're in a strong trend. We're still above the 50 period moving average, so it's still positive. There's the main news of the day, the Bank of England announcement. But we need to, the main driver of this strategy is the cross of the MACD and the signal line. So at the moment, we're just waiting here on the 5 minute, nothing's happening. So even the major news for the Bank of England today, for sterling today, hasn't moved it, because it's very much in line with what was expected from the Bank of England, from Leadenhall Street. So let me just read out, and the statements just come through here. So we're leaving it as expected. The vote is 2-7. Drinker and Taylor again. Underlying disinflation has generally continued, although with greater progress in easing wages. Pay growth remains elevated. That's true. You've seen particularly with bonuses earnings relatively strong. We saw that earlier in the week for the UK. Upside risks around medium-term inflationary pressures remain prominent. Downside domestic and geopolitical risks around economic activity remain. That's a very general statement, isn't it? Domestic. I love the words these central bankers use. Downside domestic and geopolitical risks around economic activity remain. Didn't say rates remained elevated or down. Okay, here's the key bit. A gradual and careful approach to the further withdrawal of monetary policy restraint remains appropriate. That's very much an Andrew Bailey statement. A gradual and careful approach to the further withdrawal of monetary policy restraint remains appropriate. You can see him saying that in the interviews later on today. So restrictiveness of monetary policy has fallen as the bankers' rate has reduced. Yeah, monetary policy is not on a preset path. We heard that yesterday from Powell a number of times, both in the statement and in the press conference that followed later. The timing and pace of further reductions in restrictiveness of policy will depend on the extent to which underlying disinflationary pressures continue to ease. Everything as expected, very much in line. The 7.2 print, we got, Taylor and Dringer looking for the main Doves were looking for a 25 basis cut. However, there was no dramas like we saw in August with regards to the decision today. Yeah, so there wasn't that big surprise and that split and that big move we got. So the initial move here, can you still see my screen, guys? I hope you can. Let me just bring in, so anybody's here. The initial move higher for sterling to this 136.60 area has been given up, basically. So that short, which got stopped out on the news, we have now, we haven't flipped actually, we're still moving down. So a break of the 50 would be enough to trigger a position, as long as this candle moves lower significantly. And there we are, we're moving lower. So interestingly, that cross there, the entry there, because our stop loss, because of the major news, we've been stopped out. Our stop loss would have been around the top of that candle there. So we've been stopped out and we missed this. But that's, the conclusion of this candle in 3 minutes time. If it's under the 50 period moving average, I'm happy to take that short. It may obviously bounce back from that 50 providing support. But on this strategy, on this setup, on the 5 minute time frame, that's enough to trigger a short for the cable around about 136.30, whatever it is, number there. Old tight old spreads on sterling. at the moment. So yeah, that's moving down. Let's have a quick shufty over how the FTSE's doing this morning. I actually looked at the FTSE this morning. I don't want a dollar. I want sterling. So the FTSE.X, a new setup here. Oh. So what would this have been telling us? Well, this would have gone short here at 10 o'clock. Here, you see the MACD crossing there. That's the top of the market. Nice. But you can see that there. See the MACD last signal. This is the first signal, really. So we cross there. We wait for the parabolic SAR to go. So we missed so that's top. We wait for that to flick, and that then gets us in short there. Let me just put that on. We're getting short on that. See that candle there? I'll resume that. There we are. So that's the big down candle. We crossed there for the MACD, this bit here. So we crossed there at whatever time that was. And then, get rid of that. So we crossed. That's the cross. So that's that candle there, but that's not enough to get you in because we're at highs here at 9,240. The parabolic SAR is still underneath. It flips a couple of quite a lot candles later, not until there. So we actually enter there. So we'd have got short at this. Remember, this is a crossing strategy, so it looks really impressive because it is a trend following strategy. Where's my ray gone? So we got in there. That's our entry. Let's make that a bit bigger so you can see it. There we are. That big thick. Make that green for go. You see the big green line there? That's our entry, 9,233, and then we keep the. Can I move that out of the way? Why can't I move that out of the way? Hide. So the parabolic SAR is still above the price action, long way from the price action as well. Some people use the parabolic SAR as their stop loss. It's too far away usually for me. And then we move down quite quickly. And then you could have added, indeed I would have added on that, on the break of the 50. So I could have added again there. Oh, it's not working now. I would have added again. I'm happy to have added again there because we're very much look at the size of the candles. Nice big bodied candles going down. Would have added again there, and then whatever time that was, and then the sideways actions ahead, an hour or so ahead of the major announcement of the day. But the 50 kept us the right side. The signal line and the MACD on the MACD was still moving down quite nicely. So we go down, 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 down. And this is what happens when you get major news. Unfortunately, if you program the system to follow the rules, get out when the parabolic SAR then flips. The parabolic SAR doesn't flip until 5 past the main news. So I would have, having entered there, I would have seen if this had gone sideways, and I might have got bored and got closed out down here and like a half an hour, 11:30 here. That's probably what I would have done, to be honest. 11:30, 11:20, something like that. Close my short from here ahead of the main news. Yes, it continues to move lower, but the system, if you'd programmed it, it's very easy to program this. If you'd programmed it, it would have gone short there. It would have added there if you'd added a second level of it. The basic system just uses the parabolic SAR and the MACD. It would have added a second level there on the break of the 50 moving average. But it would have then closed out on the completion of that candle. So you would have made from there to there, and it would have ignored the news. Again, bit more sophistication in the program. You can take out the major news items. It's very easy to program, but still, it would have been a winning trade. So what we're waiting for now? Well, look, now we're looking like we're crossing the movement to the upside. We may be going the other way. We don't know. The thing with the FTSE though is, guys, you can see the spread is a bit meatier than it is if you're going to trade the Forex. But I mean, system's a system, and it takes into account obviously the spread. It's part of your cost of trading. That's all the spread is. If you don't understand what the spread is, you shouldn't be trading. It varies, it moves around. It's not a fixed thing. Some brokers do offer you a fixed spread, but you pay them. You don't necessarily see the premium you're paying, but you'll pay for it eventually at some point. They've got to get their costs back somewhere. So that would be, so it still would have been a successful trade, but it just wouldn't be as well, not much more, but I would have got out there. So this now, let's do this now then, is looking to go long. So that's completed. The cross is taking place in this candle. So we need to wait Patience is key, whether you're trading 5 minutes, 15 minutes, 1 minute. It's time frame to see what happens. So we still got 3 minutes before this candle completes. The issue I have with this, again, most of you should know that the issue is the 50 period moving average. See how it provided resistance to the upside here for 20 minutes before we fell away again. That's the key here. So it'd be a tentative. If we go long here, you can see the spread will take us over the fib. We'd get in over there anyway. So it'd be a tentative, it'd be a small position, but it's see how it's done it here. It's ran there. It doesn't mean that this is then going to run up just because it's done it, loads of times here. It's done it here. Remember, this is the main news. There may be something to come that impacts UK stock markets. There may be some surprises from Trump and Starmer. It's very unlikely, but you never know. See what's happened. 2 minutes to go before the completion of the candle. There's the 12:05 candle. That's the 12:10 candle. So we got where are we? 12:13 on my clock here. So we've got a few minutes to complete. Doesn't look like, or technically the system will take the position because it's gonna fulfill the two very simple indicators it uses to trade. But again, add a bit of manual thought process, and you can see how the 50 period is providing a very significant resistance, like it did when we were coming down. See how it broke there? That was enough to get in, but it was a very weak break. So it was a very weak addition to this major main entry from this point here, or whatever it was. What's that? Oh, that line. I've lost that line, haven't I? That's fine. So that's the main entry there. It's 92340. I think that's a line from earlier, isn't it? Let's get rid of that line. Oh, it's not saying. So I want to delete that line. Why did it let me delete the line? Oh, dearie me. What can I say? Anyway, so 1 more minute, we'll see. And it looks like it's held, hasn't it? But it's still enough to get in. It's touching. It's not crossed, but that's probably, don't get to a small risk entry here. So let's do this while we're here. Let's see how the system takes. So we're going to buy it. We want to stop loss all the way down here somewhere. 9. Yeah. So we're buying it. We want to stop loss 9216. So we just put it in 9216. 92 for demonstration purposes. 9216. You can see we've got 0.01 lots. We're buying it, and we got a risk of 2%. If we want to increase the risk, we can see. Why isn't that working? I want my stop loss. Don't want my stop loss there. I want my stop loss 9216 is what we said. There we are. I want my stop loss there. I'm going to leave that there. So I want my stop loss there. I want that fixed. And I want to increase my lots, so my percentage risk goes up a bit more. So you see, I'm increasing the lots. I'm happy to risk, let's say, 0.5% on that. So take a 3.1 lot. So I'm happy to buy that. There, we're going to get filled at this price here, right on the 50 period. It may or may not. And there we go. So that's our confirmation of our position. And we'll come back to that later as the news comes out. So we're long the FTSE on the 5 minute time frame using this crossing. There's the cross confirmed there. So we got in a bit higher than we would have liked, but we're still long. Let's see where we go from there. There's our stop loss, and we just leave it, see what it runs. Obviously, the big reaction to the Bank of England has lifted us up. Obviously, there's other data coming in 15 minutes. We've got the key US data about to drop over. Let me just update this. It'll take on my defaults. So I don't know why I can't change the defaults. Right, today it's got all the one candidate. It's got all the companies I'm not really interested, but there's the change in the vote in 7-2. It was expected. It says 8-1 on this calendar, but it was very much here in the UK. It's very much a 7-2 expected split. Minutes I'll check in a minute. So this could be key. Oh, so it is an hour and a half. I thought it was. I wasn't in the half an hour. The timing was wrong. So that's 11. Is that? Is that? Yeah, because that's GMT. Yeah. So to me, it was getting mixed up. So we've still got an hour and a half, or an hour, nearly an hour and 10 minutes before the big US data comes today. The Philly Fed manufacturer. Remember what Empire State was like on Monday? A big miss, incredibly volatile piece of data. But again, it's intrinsic to this manufacturing area, which is what Trump is really wanting to boost. And we've had the issues with the jobs numbers. Jobs clearly not being generated. So if the claims, as we said yesterday, the claims start approaching this 2 million mark, 1.95 they are expected to come today. They're continuing. These are the 4 people that have been looking for work actively for 4 weeks. We'll see what that looks like. And was last week's outlier, this 263,000. Was it an outlier, or is it start of a new trend where new people are starting new claims? So people are unemployment, or they're looking for jobs and they can't find it, so they become their initial jobless first week. See what that looks like. We've been previous to that, we were around that 220,000. We were under 200,000 at some point, not that long ago. But we've been holding it. We spiked to 240 a few weeks. It looked a bit as outliers that then came back down. I just find the one if I can show you that on. It's a nice little chart on the Forex Factory chart. What I'm talking about, except it's got another. Can I show you that without showing you that? No, I can't. Okay, can't get rid of that. Can't show you that screenshot. Yeah, so it's a significant spike up, and 240,000 was where we thought was the previous high, and it's last week was a significant move higher. I can't show you that, but anyway, so this is key as far as today's concerned. So Bank of England in line, kept things at 4%. So US now down to 425, but still top of the shop. Obviously, Canada went to 2.5% yesterday. So lots of hand wringing from the administration. So there's the numbers from the Bank of England. So let's just go back to see what the FTSE's doing. Sorry, the FTSE's up, so we're in the money at the moment. So we did breach the 50 period. That would have the more sophisticated strategy would have added a second. Well, we won't do that now live, but we would have bought again on the completion of this candle on the break of the 50. See how the size of the candle above the moving average is quite significant. So that's enough I would have doubled my position now. I would have added again on the completion of this candle. I don't know why it's put it there, because it was the previous one was at 5 minutes, but we're in the money. I know this is when it starts moving. We start sort of moving our stop loss up. So this is our entry. Stop loss is still down there, and I'm happy to move the stop loss now. I'm going to see how we can do that, so we can amend it. Perhaps I'm not going to show all that. So we can sort of move our stop loss up to this next level there, so 221. So 221. So we confirm, we modified the position. So we got in at 227. Our stop loss is at 221. We're not yet locking in profits. It's just minimizing our loss based on the previous price action of the candles. It probably could have been a bit higher than that, but there we are. 0.31 lots is making us $25 at the moment. Our margin is 1,950, and there's our stop loss. There's our entry. So there we are. So people have asked me to do this, demonstrate this live. And there we go. And one of the things I know all of us, including me, can be quite critical of TradeLocker. But one of the things I really like about having used all the other platforms, guys, all the other bits of software, is this the way that you can, not mess around, but play around with your risk and your stop loss, your trailing stop loss, where you want to take your profit. But it's really quite intuitive to do that. You saw me doing it live there as we increased the risk, or you set the risk as fixed risk as well. That's another way of doing it. So if you have your risk set at, say, 1.5%, I'll tell you where the stop loss needs to be, 190 all the way down here on this size account. I think it's a $10,000 account. There we are. Would be there. So 1.5% means my stop loss will be there, 1.9. If we reduce the risk to just 1%, it puts it up here to 9212. Okay, so obviously at the moment we're here at 92021. So lots and lots of different ways. If you have that size lot count, the other way to do it is vary the lot count to get your risk level. So it's I really very much more intuitive than some other platforms regard to putting risk on the market. So there we go. Is that still in play, isn't it? So let's get rid of that. There we are. So that's our stop loss. There we go. We're going higher, and I'm happy to now move the stop loss up to entry, locking in. So we can't lose. We're $45 up. We may lose all of that. Who cares? We're demonstrating the strategy here. So if we just move our stop loss up to, what was it, 27, wasn't it? 27.11. So we move up to, call it 28, which is just below the, you can see 28.16 is the, let's just move it just under the 50 period. So that's 9228. And we confirm that. So there we are. So this is a non-losing trade, potentially. Never know what the spread, the costs of it, of doing it, may be, but there we are. And off we go. Now then, let's not get too greedy. So we're back to this area where we went short before. So let's just go up the time frame and see where we are on the higher time frame. So let's step up one by one. So 15-minute time frame. Oh, look at this. We're at a key resistance level. This is from yesterday's open. This is yesterday's. So this could be a key level. We break through here, be positive, but you could take some of your profit off the table there. And I might even do that. So that's a 15-minute. A 30-minute, a tad higher, but we're moving quite nicely on that. The hourly time frame. Now it's a bit more. You can see there we are. You can see it's a bit more of a resistance area. So there'll be profits being taken there. In fact, I might just join them. There we go. That's enough. An hourly intraday. It's 5-minute time frame. It's enough to take it off. I'll come back to the reverse of that in a minute. So the key swing traders, 4-hour traders, they'd be looking, they're not interested in this. It's looking positive. But, the 50 period on the 4-hour time frame is all the way up there at 9251. We're currently at 9239. So we're a step away, but we are at a key area where we turned around yesterday. A bit of a sort of rally, a move up we'd seen from Tuesday and Wednesday and Thursday up. Now we came back down. That big engulfing candle. Positivity, presumably, I'm guessing. I don't really know. I'm not following news in that sense. What's swirling around with regard to Trump and Starmer. So you can see now, we're down to 38. So there's been some sellout. And then if we go all the way up to the daily time frame, where are we in the day? Well, the daily time frame is really directionless. It's relatively positive because it's been over the 50-day for months. Well, certainly, I'm saying months. It's been over the 50 days since the 2nd of May. There we are. That's the daily. That's the 50-day moving average, and it's so that's not really helping us very much. For sort of sideways, and so because remember this is a 5-minute time frame. The daily time frame is a little bit irrelevant to the 5-minute. There we are. We've clearly had, as I was speaking, we've had profit taken by the guys here that have seen it on the other time, or this stop loss. I won't close it, as I said. We'll just let it run, but we could easily come back down now. And again, this blue line here at 9230, it's the big round number. We've gone to 9240 through here, and we're back to 9230 potentially. So anyway, So the rules of this strategy is we stay long until the parabolic SAR flips now. So we'll just we'll trade it as if the strategy was trading it, rather than taking advantage of what we know around the news. So I would have certainly might have taken off some partial profits there because of what we identified in the higher time frames. Now, all of this should have been done before you start. You just jump in on the time frame that you're trading. You need to know what's going on in a higher time frame, and indeed what's going on in the lower time frame. More importantly, the higher time frame. If we go down a time frame to 2 and the 1 minute, we can see that's it broke the 50 period here on the 2 minute at 6 minutes past 12 after the data come out. So you could have got long there on that one. You can see the strategy crossed there at 2:04. So that would have been an entry there. So the 2 minute guy would have been long there from 2:19. We got in. We didn't get in till up here somewhere, did we? On the 5 minute. So doesn't always work out. But then we found that's nice. So that's nice support. And again, you can see here on the 2 minute traders, so the shorter time frame traders have been taking profit as it's gone to the next target area. It didn't quite get to the top of there, but it certainly got into that range, didn't it? At 9,239, and then the 1 minute guy, whether automated or otherwise, obviously chopping around all the time. Now the 1 minute guy, he's got out. He's got in. There's the cross of the MACD. The parabolic SAR is already crossed, so you would have entered there. So the 1 minute trader has got in there at 9,219, and we've ran it, and it's ran away. The parabolic SAR has kept us under, and then it's flipped from below to the top here. So you'd have got out here a couple of minutes ago at 12:26, and that's probably what's caused some of the selling. The 1 minute traders on there, but again, that was a strong entry on that candle, and then a big strong entry there at 12:07 for the 1 minute trader went against you, but your stop loss down here somewhere initially, broke up. That's up here. So anyway, we use this on let's just do this mechanically, following the rules. So this is still long, the 5 minute. The 1 minute's already flipped. We saw that. Has the 2 minute flipped to the upside? No, the parabolic SAR here on the 2 minute is still under there. Interestingly, it's getting to the 50 period as well. That's a technical thing. Don't worry about it. So we're still 2 minute trade is still long, as are us here at 5 minute. But our profit, we've come down a bit at 36.35 from 49. But there we go. We're still long, and we've completed that candle, and we're down again. So our first biggish down candle since we got in earlier today. So I say we'll just leave that running. Let's have a look elsewhere. What's going on today? We come back to the FTSE. That demos. Wait and see what the situation is there. So I'll just get rid of. Don't get rid of. Oh. It's taking the trades off for some reason. Oh, did I click there? I clicked something. Off spaces, okay. Markets panel, order panel. Order panel. I will leave the trade panel on because we can see what's going on there, can't we? Right. So elsewhere, yesterday, all our trade. I don't know if I updated the Discord group yesterday, but yesterday, let me just check why had we got to yesterday? That was at 5:30 yesterday. Yeah, as I said, there was lots of potential trades the previous night, and we didn't take any of them. Powder drags. I had 6 or 7. These have all been now closed. Nasdaq was a big 700 problem, but since I posted this at 5:30 yesterday, post Fed, all of these have been closed out. So the S&P also closed out for a gain of 89 points. The Kiwi, and we got another 14 points on that, and we got another 36.5 points on the euro yesterday. So as I've seen this last night, bizarre. It's been quite an interesting, quite an outlier of a week as well for me at the moment. So we've had 1, 2, 3, 4, 5, 6, 7, 8, 12 closed trades, and all of them are winning trades so far this week. I haven't had a completely winning week since I can't remember, but there's only 12, and they're all winners at the moment. obviously there's still Friday to come, but there's nothing open. Last night, what happened last night? There were some positions that I didn't promote, or didn't tell you. We went long the Dow, and some others, the stop losses were too close. Pound Kiwi was a potential trade which we didn't take because I think the stop loss was too close, but it's absolutely rocketed today. Let me show you the Pound Kiwi. Anyway, so we did go long on the Dow last night. We've got the daily time frame. So this triggered long last night. I haven't marked it on here yet, but that was a long on close last night, and we're up again in early pre-market trading this morning. So that's a long position. I'll update what that was last night. So the other one, others we didn't take. The stop losses were too close. The most interesting one though was the pound Kiwi. If I find a pound Kiwi, obviously it moves. I mean, lots of pips. This particular pair can run. Look at this. So this is the daily. Remember, this was a triggering long, but the stop loss was a bit too tight last night. It's down here. So, but massive rally. It's already hit its 30 pip target and more. So, don't know what's caused that. It's weakness in the yen actually. Sorry, not in the yen, in the Kiwi today. First, you can see the Kiwi has had a bad day. There's the yen. Kiwi yen down. That was another one that I didn't take. Kiwi CAD. See, big old move there. And the dollar came back, and that was yesterday. We'd had dragged our stop loss up, but you see a big down day today. But that was the final close out of the long we had on the Kiwi from down here earlier in the, I think it was last week, in fact, wasn't it? But certainly huge move for pound against the Kiwi today. So pound looking a bit stronger today. As far as today's concerned, or tonight's concerned, there's not a lot going around. We've got a Kiwi dollar on the main system. That'll be a short, I'm pretty sure. And on the more aggressive system at the moment, we've got the Kiwi dollar again. So doubling up on the Kiwi dollar potentially, and pound yen. That's likely to be a long on the more aggressive system. Yes, indeed it is. Stop loss is a bit too tight on that at the moment. No, it's not. No, long. Yeah, long pound yen. I might fill that now. So sterling's having a good day. Also, as we saw, FTSE's having a positive day following the Bank of England keeping interest rates at 4%, the overnight rates. The only little surprise, again, I had it at 2.7. I don't know what this calendar had it. This calendar had it at 1.8 anyway, but nothing like the fireworks we had here back in August. The 5-4 split right down the middle last time. I remember some wanted to raise, some wanted to cut, some wanted to cut even more. So a lot of discussion, and I had to vote again. Remember, unprecedented second time vote, and the chair didn't, Andrew Bailey didn't cast a vote as a casting member. He just went with the majority to cut rates that 25 basis points, but we had the two as expected to keep rates unchanged, or to look to move rates, the doves to cut rates another 25 basis point. But we remain at 4% here in the UK. As I say, sterling has benefited from that. Let's go back to table. Pound crosses. So the main one obviously being pound dollar. Oh, there it's flattened on the day now. But that's what we said, didn't we? We had that move up, and now we've moved down. So again, that's looking. Well, no, we'd have been stopped out, and now look where this strategy is waiting for a cross now, for this to cross to go down, but it's certainly short there. And if you'd had your stop loss way up here somewhere, which you wouldn't have on this 5 minute unless it's a particular area. No, it's not. You wouldn't have had your stop loss that high. I wouldn't have thought. That goes back to you would have had your stop loss just even if you'd been conservative and had it at the parabolic SAR there, you'd have been stopped out on the data. But obviously it's major news. So we went up and then went down. So sterling has weakened on that to the downside, which has obviously helped that FTSE trade we saw earlier. Go back to that, see if that's still running. So yeah, we're stalling again, but still sideways. So we might consolidate here, we might move up, we might move down, but that's still in the money, $32 now. So we'll just leave that running. So there we are, my friends. We've got a little over an hour or less than an hour before some key US data, the initial jobs claims. We'll have a look at that later and see how that plays out in the markets. But the only new trade from last night, and I'll update the Discord group, was that long on the Dow. And so far this week, if we take out the 700 points we made on the Nasdaq, we're still up nicely for the week. 200 odd points on the forex market. So we've Nasdaq we made 3.2%, and on the S&P we've made 1.37%. Obviously, those numbers are much bigger than you get on forex typically. Certainly, the Nasdaq we're just looking at points. So there we go. Join me tomorrow. We'll have a weekly wrap. It's the Canadian retail data tomorrow. I'll update this. I say we're certainly in the money. So these are all closed now, and we went long last night on the Dow, and we didn't. The other forex trades were at the stop losses a wee bit too close. Even that pound Kiwi, which has rallied away. If you want to join us, come and join us. You've got very, even if you blow your account, you've got very little to lose to get started. But we're very clear with our rules. It's very open. It's very straightforward. We've got nothing to hide. We hate scammers. Everybody hates scammers. Everybody's trying it on. You don't need to do it, guys. Learn to do this yourself, and you have don't get too greedy. Don't try to have multiple accounts all the time. Don't try and copy what somebody else is doing. Learn to do this yourself, and you have a skill that will last you for the rest of your life, my friend. So if you're starting young, if you're listening to this and you're under 20, you've got a whole life of trading ahead of you if you can get this. Find something that works for you, whatever strategy it is, whether it's those ones I've just been demonstrating, or I don't know, price action strategy, or a net swing strategy. Whatever works for you, we're happy to have you as a trader. Prove yourself with a small account. The Express Challenge is becoming more and more popular because it's only one step. Everybody seems to be in a rush these days. And it starts from $5,000, $55. If you're new 25 gets you a 25% discount on your account. Okay, and that's regardless of the account size. So a $55 account becomes $41. But I would argue quite strongly that the extra investment you make to get a $25,000 account is more than 5 times the equity increase you get. So look, you get $25,000 of equity compared to $5,000 of equity for $130. That's and what does that mean? Well, it means that you can trade some of these things that you might not want to trade. The things that CAD against the Swissy, the euro against the Swissy, pound Kiwi, things you might not look at, but they trend, they move. There's lots of pips on offer. Spreads might be a little bit wider sometimes at some times of the day, but they move as well as the big like euro and pound and dollar yen. There's money to be made all over the place and at all different time frames. Most of mine is made on an end of day basis, but you can see here this 5-minute strategy is doing quite well, and we demonstrated that live, didn't we? So it's up to you, my friends. Come and join us. We're here to help, and you've got nothing to lose. I mean, $100. Obviously it's a lot to many people, but to get into the world of trading, it's a great start. And if you haven't got that, literally, do start with the 5,000. But the more you can invest, the more you can make, basically, because obviously you get through your phase one, your funded account is the same size as your challenge account. So your $25,000 account is waiting for you. Keep to the rules, trade sensibly, trade in a disciplined nature. Don't try anything dodgy. If you don't understand what you're doing, ask. We're here to help. Okay. And every Friday we pay clients, and tomorrow is payday, no different to any other Friday. So take care, everyone. I will see you tomorrow for the Canadian data and a wrap for the week. So we've had Bank of Canada cutting, the Bank of America, if you like, the Fed, the FOMC cutting yesterday. Bank of England staying pat. We got the The Bank of Japan likely to stay pat later on this week as well. Lots going on. Watch those job numbers. That's the jobs are very much in focus as far as the markets are concerned, and the traders in the US. So this will be key in the next hour or so. The US Philly Fed and the jobs claims. Okay, take care. See you tomorrow. All the best. Be good.